And joining us now as we take a look at Thursday's market action, plenty of things to discuss across the market trade, a lot of outside factors. We bring in our good friend Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Bryan, good to catch up with you today, sir. And, it's been a real busy week in the trade. We had a WASDE report Monday. We've had a lot of economic data, and then this rail strike issue. Sounds like we got a resolution there early Thursday, and it feels like that maybe folks in ag breathed a sigh of relief, but it also weighed on the markets a little bit Thursday.
It did, in particular, I think, on the wheat market. The big concern there, especially as you get further west, is moving that spring wheat to where it's got to go. Concerned about corn. Didn't really see the corn seemed to be sort of immune to any of the news today. It traded a nickel higher and ended about a nickel lower, but it was back and forth most of the day. We had 4 weeks of export sales data that was compiled, and it turned out to be kind of uneventful too. And really, in these higher priced windows, and boy, almost daily you read about lockdowns or shutdowns or this down or that down in China. We're just not seeing this sort of robust end user buying at all cost. What we're seeing is this week a USDA report that was in particular friendly for soybean market blow up and then quickly give back about half of its gains. The corn market saw a relatively neutral report, participated in the rally on Monday, and since has now drifted the last 3 days and taking back some of its gains. You've got harvest right around the corner. You've got good-looking crops in parts of the country. You've got the poor crops kind of already spoken for. What I mean by that, a lot of chopping already done. A lot of guys are getting at the corn. So I don't know if you're going to get this sort of big surprise that, boy, these yields are a lot less than we thought. That stuff's already known, I think, and in the pipeline. So from a trader's perspective, you get a little rally this morning and you don't see the follow through. I can see where traders were saying, okay, corn's a nickel higher. I'll sell that and see what the end of the day brings. So if you're a bearish trader, you're ahead at the end of the day now.
Well, and I wonder too, with all the news we've seen this week across all of the commodities and the ag commodities in particular, and looking at grain specifically, you mentioned how we just haven't had some of the follow through. We've given back some of our gains here and there. Do you feel like maybe the markets are just a little tired here this week with all the news that's been thrown at it, Bryan?
Well, and the other news that you and I didn't talk about was we had a big snapback in the dollar too early in the week. And so yes, it's the old saying has a lot of truth. You need to feed a bull. And then Bryan Doherty's PMA, which stands for perception, momentum, attitude, to keep markets moving, you need perception, you need momentum, you need attitude. And the perception, we're trying to move the market higher. We saw beans move up. The perception is tight in inventory, but the attitude is, well, they're high enough. We need to see what export sales are going to bring, and we've got harvest. So I don't think you have this idea that, oh my gosh, we could look at another month of dry weather affecting the crop. The crop is what it is right now. It'll be harvested and we'll get better, let's say, field results. But I don't think if you think about statistically, when you start out at the beginning of the season, you have these, what they call, I guess, correlation coefficients, where you start out with sort of a wide range of what could be. It's getting narrower and narrower. And so there's probably not a lot of surprises left. And so the trade just sometimes loses momentum. And we see it on our end. Farmers are really gearing up to do field work, take advantage of nice weather. And our phone volume is down this week as well.
Well, talking a little bit more about Monday's WASDE numbers, I'd love your thoughts just with those, because we really saw USDA tighten up the balance sheets, especially on the soy side, which was a surprise to the trade. Corn got tighter as well. Looking at those numbers now and maybe having a few days to digest it, and as we get busy with harvest season, what are your thoughts here? Is it still the idea that smaller crops getting smaller possibly here in the trade?
I think yes, but to a point. And the reason I say that, if you look through the report, and the USDA does a really nice job of over the years becoming a little more visual. So they have a chart of the Midwest and then where the yield increased or decreased. And it's right to form where all the dry weather was. All the decreases in soybean yield were out west. So it does tug on the soybean total. So that was a surprise. I thought the surprise was the soybean yield at 50 and a half bushels. Most people were expecting 51 to 52, 51 and a half. So you take a bushel an acre off. Doesn't sound like a lot, but remember that's 4 or 5%. And when you're talking about carry out for next year, 200 million bushels. My goodness, that's kind of paper. We always said 200 million bushels or less, getting kind of paper thin.
Mm-hmm.
And anything less than that, if you really think about, geez, I'm trying to be a little visual here, but if you have 50 states in the United States and you have 200 million bushels, that's 4 million bushels per state. Now start breaking it down by county. It's like one bin of beans per county. Not much out there. Now I know that's a bit exaggerated, and we really don't know if we care about beans in Rhode Island or not. But but the point of it is that is not a lot of inventory to have as a cushion. So all attention will be focusing on the Southern Hemisphere and their crop prospects. And then the other thing this week that, again, lockdowns in China, more concern with China. That is becoming a theme continuously. And one have to wonder if they're kind of ready to spiral, economically out of control. That's pretty exaggerated on my part, but there again, big country, 1.2 billion. Are they going to come in and swoop up inventory just to have it? Or are they really just going to buy what they need for right now and hope that South America comes through? We don't know that answer, but what we're not seeing is some kind of a big number, Jesse, even after the report, like China didn't, one day, reports on Monday, they didn't come out Tuesday and say, hey, we just sold big amounts. Now, what did happen, and we have to be fair to this, is China did buy a lot of beans out of Argentina.
Mm-hmm.
And so there, the U.S. lost out on export share there. But from my view, I don't really care. As long as China's buying something Western Hemisphere, whether it leaves the U.S., Argentina, Brazil, it's one less bushel in the Western Hemisphere available for next year or whenever. And that's probably the big deal here, is that China is buying. But I am getting concerned. Just it seems like day after day we have some kind of economic woes out of China that really has us wondering if the USDA doesn't have to temper their ability to buy as much as maybe initially forecasted.
Well, and to your point as well, I know China buying, it sounded like whole beans out of Argentina. So for some countries that might need crushed beans, maybe come to the U.S. for that. But also more on the China side, there's this talk about the U.S. readying sanctions in the event that China would invade Taiwan. And that just feels like an escalation of the geopolitical situation that could really impact our economy and the ag economy, especially moving forward.
It is a very tenuous environment. Not only China, Taiwan, Ukraine, Russia, China, um, go on and on. One article you read, it looks like Putin's got his back to the wall and he's ready to crumble because the country's going to, ban him and whatever they're going to do. And then the next article you read, he's fully in charge and he's got this all thought out. So it's anybody's speculation. I would maybe make the point that the war has drug on a lot longer than probably most people thought. At least that I read initially. They thought this would be over relatively quickly. And here we are now 6 months into this. And now Ukraine seems to be in the offensive. It seems like the U.S. is more involved than ever through aid and these type of things. So we'll have to see where this plays out. But I think in the big global agricultural perspective, what we need to kind of think about is Ukraine will not plant all its winter wheat crop. Ukraine will not export or sell as much corn as it would typically. The world is going to remain tight in inventory. Northern Hemisphere supplies remain tight. The need for big acres in the U.S. next year is paramount. A little bit surprised we're seeing DS23 corn down as much as it was today. But on the big picture, world supplies are pretty tight, and it goes back 4 years now since 2019 that we've seen this trend. So if the world wants to maintain some sort of level of usage and comfort with food, it's likely these prices are going to have to stay where they are.
Bryan, let's talk the livestock trade. It looked like the hog market liked what it saw in the weekly export sales numbers. Some really good strength in the hogs on the day Thursday. What are your thoughts there?
Yeah, good export numbers. Those who thought the hog market might have gotten a little undervalued certainly seem to be vindicated this week. And I'll point out, too, we saw stronger cash cattle prices today, too, out west. So kind of encouraging on the whole demand front from the meat sector. A lot of back and forth on the economic environment in the U.S. You've got an administration that says, hey, look, unemployment's low, people are working. Yes, there's inflation, but we're getting that under control. Others say, hey, this inflation's out of control. It's just a matter of time before companies start to lay off people. So you got all this kind of tugging back and forth. I think as long as unemployment numbers are low, it's hard to argue that the consumer isn't going to spend money. And where are they going to spend it? I don't know if they'll chase high-priced beef and pork prices, but I don't think they're going to give much of it up. Probably where they don't go is into high inflationary type environments that maybe they cut back on travel or maybe they cut back elsewhere. Seems to me, just my personal preference, we celebrated some of my in-laws' birthdays, 88, 90 years old combined. Boy, tough to get a seat at the restaurant. So it seems like the consumer is still wanting to get out there and buy and work at it.
Well, and you mentioned, as well, some of the economic data playing into the livestock trade and the broader economy as well. The CPI numbers earlier this week, a little bit hotter than expected. Felt like that kind of caught the trade off guard a little bit. I know we had that huge drop of the Dow Jones on Tuesday, but since then, we've kind of just drifted around, it feels like, in the stock market.
We did that, that was another factor this week. So it's Thursday. It feels like this week is 2 weeks old, but you're right. We had 1,000 plus 1,200 point drop in the Dow Jones, and that was based off of the inflationary concerns, I think, and just the market had been working upward for several weeks. So, but it didn't. From my perspective, somebody who watches market, what always concerns me is the speed or ease at which the market can go down. And that's concerning to me in the stock market, that you don't have this plethora of buy orders underneath holding prices up. Some they take a 200 or 300 point hit, you'd expect, but to go down 1,000, that's a big percentage change in one day. Tells me there aren't a lot of investment dollars necessarily pancaked underneath the market. That, I think, is just a cautionary sign of where we are economically. There's a lot of uncertainty, and it's just not here in the U.S. It's, again, China, it's the war, it's Europe, it's the idea of a recession in Europe, maybe bleed a recession over into here. In general, though, is the Fed going to raise interest rates 3/4 or 1 point? Nonetheless, it looks like a raise is coming. So when we get a raise, is that going to slow down the economy too much? It's a big balancing act. And this is not unusual historically. It's just unusual the last decade. We haven't seen a lot of it. We've been pretty stable the last decade.
Very true. Bryan, how about the dairy market here this week? What are your thoughts that you're seeing there?
Well, it was off today, and you kind of scratch your head because the butter market has been incredibly hot, all-time new high prices in butter. Oceanic prices have been a little bit of increase, but overall decline. A lot of back and forth in dairy. And then when I stepped back, had several conversations. Again, I always try and keep fresh with conversations with producers. What are you guys thinking? What are you doing? I'm not pinning these guys. I'm just asking them. I just want to get a perspective. Are you thinking that you're at a point where you really want to grow your herd? What are you? I'm not getting any of that yet, Jesse. So I think the dairy herd is pretty stagnant. It's taken on a different form. One of the guys that I talked to quite a bit, he said, we've gotten so good at breeding these cows to get a black calf that we're not necessarily having all these heifers and dairy just at the ready, because we're breeding for beef for our cows, through our cows. And so interesting take there. Their biases look pretty good demand for beef. We think we can do well with that. Put the corn through the beef, that type of thing. A little bit of a change, but I just don't see the expansion. I want to believe that your dairy industry, boy, between butter and block and cheese prices up here recently, that we get a little bit more push in the market. But today was an interesting day. We finished down on positive cheese prices. That's got me a little bit concerned that the sort of the robust momentum that carrying into fall for Super Bowl, and we saw a lot of articles this week about cheese demand for pizzas for the football season. Maybe that's already run its course.
That's a good point. Bryan, before we run out of time, I'll leave the floor to you. Any final thoughts you have for us here today?
Yeah, I got a couple in corn and soybeans as producers. You got a nice punch up this week. A little bit disappointing where we are today compared to where we were early in the week. Just keep in mind where prices are historically. I always am concerned that what we don't know today can haunt us tomorrow. That is, all of a sudden prices fall out. So get really strategic. What do I mean by that? Think about things. What's the basis look like? What's the carry in the market? There's not much carry to work with, if any. So if you're going to store, why? You've got to be bullish, or you got to expect basis to improve, but if basis is decent, in some areas it is, in some areas it isn't. But start thinking about those, checking those boxes, and that'll help you make a decision. You don't, and this is a cliche, but you don't have to own your grain in the bin. You just don't. There's different ways to own it. And so think about the advantageous way to do that. I know that's hard when you own an empty bin, but maybe you sell your grain and rent your bin out. I don't know, but it's certainly food for thought. But strategic into harvest. Give some marketing thoughts. Don't get surprised. Corn can drop 50 cents in a week, and beans can drop $1 in a week. And the reason they can is because they can. There doesn't have to be a rhyme or reason. Just remember that beans are always $1 away and corn 50 cents away from anywhere.
Well, Bryan, fantastic stuff as always. If folks need some advice, how can they get a hold of you guys there at Total Farm Marketing?
Yeah, best way, phone call, 800-334-9779. Probably the second best way, just shoot us an email if you want to shoot one to me, or I'll get it to if you got a question for some other advisor in the company. But Bryan with a Y, BRYAN, at totalfarmmarketing.com, or just take a look at our website and you can click around there and get a hold of us as well.
TotalFarmMarketing.com is that website. With that, Bryan Doherty, Senior Market Advisor at Total Farm Marketing. Always a pleasure, sir. Have a great weekend. We'll talk to you next week.
Thank you, Jesse. You have a great day.
And that's Bryan Doherty with Total Farm Marketing. That's going to do it for Market Talk. Find us online, markettalkag.com. I'm Jesse Allen. Have a great afternoon.